Hi, Coach Greg Sneed here with Lifesaver Financial Services, helping you to keep more of the money you make so you feel better about your life. You can check me out at lifesaverfinancial.com. The month of April is Financial Literacy Month. This week, we're talking about insurance. Yep, everybody's favorite, right? Most of us don't take time to think too much about what insurance is or how it works. People do tend to think about it after they've experienced a loss. So, what is insurance? Well, most of you have some type of coverage for your car, your house, or life. But put simply, insurance is a contract represented by a policy in which a policyholder receives financial protection or reimbursement against losses from an insurance company. The company pools clients' risks together to make those payments more affordable than for you trying to cover that risk on your own. The risk shifts the responsibility for losses from one party to another in return for a payment. And this is the underlying tenet of the insurance industry. The risk to you always exists. The bottom line is that you're responsible, and insurance allows somebody else to pay the cost based on you taking the steps in advance to obtain the coverage. And there's a wide variety of different types of insurance policies that are available, and virtually any individual, any business can find an insurance company willing to insure them, but for a price. Now, businesses also require insurance. We're not going to cover those today. This is strictly on individuals and consumers. All right. So, what are the different types of insurance coverage for you to consider? Well, you've got health and medical insurance, home and property insurance, auto and motorcycle, travel insurance, boat and RV insurance, life insurance, disability insurance, liability insurance, unemployment insurance. This is a new one here, cyber and computer insurance, and also specialty lines of insurance. Now, a policy premium is its price, and typically it's expressed as a monthly cost. That premium is determined by the insurer based on your risk profile. So, if you've got a large history of accidents or you're likely to incur a loss based on certain circumstances, you may pay more than someone who has not been in a lot of accidents. The policy limit is the maximum amount that the insurer is going to pay under that policy for that covered loss. And those limits are specified in writing within the policy or the declaration page. So it's very, very important to check out those specifics. There's also a deductible, and it's a specific amount that the policyholder must pay out of pocket before the insurer begins to pay a claim. And those deductibles serve as a deterrent to large volume of small and insignificant claims. Deductibles can also apply, to different things with inside of the policy. So they might have a smaller deductible for a collision versus a theft. Okay. Policies with very high deductibles are typically less expensive because of the out of pocket expense generally results in fewer or smaller claims. The bottom line is an insurance is a contract in which the insurer indemnifies another against loss from specific contingencies or perils. It helps to protect you, the insured, or your family against financial loss. So be sure to tune in again to learn more about your money, because when you feel better about your money, you feel better about your life.